From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 17, 2017. In just a moment, we'll be taking a look at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. But first, a recap of a couple of the trade suggestions made over the past few days. First off, starting here on the NZD USD, the New Zealand dollar, US dollar. Yesterday, we saw the market come back up, retrace back up into resistance, the green shaded area up here at the top right-hand corner of the chart, into the 72.20, 72.40 level. I went ahead and took a short there, Fibonacci in that area. Of course, it was in the direction of what has been the momentum for the month of February. So I went ahead and took a short right at 72.20. You can see the trade going at the bottom of the chart. 24, 25 pips right now. We've seen a little bit more as it touched back to the yellow shaded area. Let me zoom in here on it one time. You can see just bouncing off the green zone, coming back down to the yellow zone. Current stop loss is locked in with profit at 5 pips. Can't lose on the trade. If it continues to pressure lower through the yellow shaded area, of course, today is what we're hoping for. We'll look to target back down here to the blue zone where the 100 period moving average sits. And of course, your current resistance is the green zone. If you didn't sell at the green zone, I probably wouldn't sell it on top of the yellow zone because that is currently acting as support. So if you're looking to buy for whatever reason, then this would be a good place to go long, but not necessarily the direction I'm looking at. With the dollar positive data that we've had this week, you know, most of the news and the data this week has been very positive US dollar. Unfortunately, we've seen the dollar sell off regardless of positive data a couple of times this week. So looking forward, if the data takes hold and we see the dollars take another surge positive, we'll look for the breakdown of this yellow zone and a move lower. Moving over to the GBP USD, over the past few days we've been concentrating on selling this currency pair into the resistance zone, which happened to be this green shaded area. Let me zoom it in one time here on the daily time frame because this is important. Kind of ignore the days count today, because if you go back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, we were inside this blue box. All the candle bodies for the past 9 or 10 days have been held up inside this blue box. Well, while it was up here at the green zone, 1.2517 to 35, I went ahead and took the short there. The market went down. I saw profit into the orange zone. It went back up, took me out at my break even, by the way. Here's the trade information. Took me out at 5+ pips, actually. I entered it at 25.15. Market came up, took me out at my stop loss at 25.10. I made 5 pips on the trade, and then it turned around and went down all the way back to the yellow shaded area. I don't think you want to sell it right now. If you take it down to the 4-hour time frame, take a look at this. You see it right down here. Look at this blue trend line connecting the last low, this low, and that's where we are right now. So don't go short right now. Not a very good opportunity to go short into support. If you're going to go short, it needs to break down now through that yellow shaded area for further movement lower, or at least come back up into resistance, which is now the orange shaded area, 24.54, or we'll call it 24.55, 24.75 for the pound dollar today. Now, let's take it on over here to the US yen, take a look at our technical aspects of the chart, and then we'll discuss some of the fundamentals. First off, we have been, for quite some time, since the beginning of the year, in a downtrend. The blue trend line represents that, capping out the high at the very top of the blue trend line, and this high right in the middle of the blue trend, pink shaded area, right around 115.30 or so, made that high, and we put the blue trend line there. What's interesting is today we're sitting on top of that blue trend line. So we came down from the high, touched this high, and now we're on top of it. It pushed through it, sitting on top of it. That's very important for today's analysis. A technical support on top of what was a bearish trend. Basically, since the beginning of February, you look at this candle right here, February 7. You can even go back to the previous candle right here, this red candle right here, and that was back in February 6. So since February 6, we have been on a rise after touching back down here at the green zone. So we rose from February 6, broke through the blue trend line, now sitting on top of it. Other than that, take a look, 112.80, 112.50, the purple shaded area where the current market sits. Follow it back here where this blue box is, and take a look at all this support. We saw support, reversal, support, reversal, support, bounced off it a few times, and then finally broke through it, made the green zone. So again, look back here where the blue box is. Can I zoom it in one more time? Yep. Right here. And I'm looking back here. Let's put a couple of X's. Right here, support. Right there where the black X is. Here's support here. And again, here is support here. So we know that this purple shaded area between 50 and 80 has been support before. So we know it's a technical support barrier. We even see some resistance top of the black box. We see sitting on top of the blue trend line. I've also taken Fibonacci from the last low, the low at the very bottom of the chart, to our most recent resistance high here at the green zone. So basically from green zone to green zone, the low to high. Fibonacci there puts the 618 fib at 112.87, right on top of that purple shaded area. So I believe technically we have a support barrier here into the purple shaded area, and only really if it gets underneath it do you look for it to go lower, at least back down to the green shaded area down here. Back up, we look at the orange shaded area as our first resistance, yellow shaded area as our secondary, and of course the green zone up here would be our last resistance before breaking and making a new high towards the pink shaded area. So technically those are our levels to watch, Fibonacci in there, trend line. So fundamentally, again, I think that this week, overwhelmingly, we've had positive U.S. data. All of the news that we've had this week, even the Fed chair's speech this week was predominantly hawkish and good news for the U.S. dollar. So all of that really leads me fundamentally to look for dollar positive movement. Again, unfortunately, we haven't seen the market recognize the fundamentals. It's been selling off regardless of the fundamentals. So let's look for the support. Now let's look for the fundamentals finally to take hold and for the buyers to come back in for the U.S. dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.